Hi guys, welcome again to another quick lesson. In this lesson, I'm going to be showing again loan adjustments, and this is an extract from the NSC November for the year 2022. So in this one, the learners were required to prepare the statement of financial position, and let's see how we can do that one. But to begin with, let me stick again to what we've done in grade 10. In grade 10, we have opened what is known as the loan account. This is what you're seeing over here. Okay, so here's my T account, and I call this my loan account. Remember, liability on the credit side is a plus, and then on the debit side, that will be a minus. And then I have my opening balance, which I'm going to bring here. My balance brought down. Remember, that's 1,280,750. And then I close it up like that. Remember the double lines, and beneath the double lines, then I'm going to have again another balance brought down, which is 1,159,000, because it is a liability, so it has a credit balance. So I come here, here's my balance carried down, 1,159,000. Interest is cast in stone. It has to be here on the credit side. All right. And then interest is given, which is 142,250. So here it's 142,250. And then the one thing that then remains is the repayments. All right. So I'm just going to say bank here. And for me to get that one, I'm now going to close off my ledger account. I'll now say the 1,280,750, which is this one here, plus the interest, which is 142,250. And then that gives me 1,423,000. 1,400. Okay, let's do that again. So it's giving me 1,423,000. All right, so we back again here, 1,423,000, like that. And then to get the amount that was paid, I'll simply say the 1,423 minus the balance carried down here, which is the 1,159,000, like that. And then that will give me 264,000. So the 264,000 is my total payments. Okay, but I know that in the 264, I paid for two things. Remember, the first one is your interest, which we already have, which is my 142,250. So if I come in, then I subtract the 142,250, and then I'm going to remain with 121,750. Okay, then I remain with 121,750. So here, 121,750. That becomes 121,750. That becomes my loan repayment. So in other words, in this year, the amount of loan that we have paid is 121,750. That is a long way to do it. The quicker way is simply to say your loan at the beginning, which is 1,280,750. Then you subtract your loan at the end. Are we still together? Which is your 1,159,000. Okay, which is your 1,159,000. Okay, like that. 1,159,000. Let's see how much that is going to give us. So I would say my 1,280,000. Then I subtract the 1,159,000. Okay, and then I'll get my 121. Okay, I left here it's 1,280,750 there. Okay, so here it has to be 280,750, like that. Okay, 75 and then 0. And then it gives you 121,750. So it then gives you 121,750. 121,750, like that, which is the same as I would have got up here. Okay, so let's come here and we want to complete this. I know that on my non-current liabilities, these are liabilities that will be within the business for 12 months and more. right? And current liability is 12 months and less. So I will now come and say, let me just say 12 months and less here, like that. Now, I now know that my loan at the end is 1,159,000. So I can come in and say, loan, I open my bracket, and I have my 1,159,000, like that. And then we are then told a fixed monthly installment, including interest, was paid in full. So we have already considered that. Now, the capital portion of the repayment will increase by 10% over the next financial year. The capital portion we have already calculated. It's 121,750. Okay, so it's 121,750. Now we're being told that it's going to increase by 10%. So in other words, we're saying it's going to be 121,750 multiplied by 110 over 100. Or you could have simply multiplied by 10%. Then you add that amount back again. So let's now say on this one, we now know that it's going to increase by 10%, which is 110 now, over what we have, which is 100. Then you multiply that by the 121,750. And then that will give me 133,925. But this is for the next financial year. So I'll come in, then I'll say minus. All right. So once we talk of the next financial year, we're talking current portion of loan. And we know that our current portion of loan, we have calculated it, and it is 133,925. So I'll come here and say minus 133,925. And then I'll come down here and I'll say current portion of loan, current portion of loan. And the current portion of loan is 133,925. That is my current portion of loan. So I can close that one up. It's now easy. And I'll end up now with my 1,025,075. Okay. And then it's 1,025,075. That is what I will end up with. Okay, so this one was interesting in the aspect that the capital portion will increase by 10% over the next financial year. So the examiner can play around with this. Instead of increasing it, they can decrease it. All right, so if they decrease it, when you say 121,750, you are no longer saying multiply by 110. You are now saying multiply by 90 over 100 because it's going to decrease. Okay, so I want to encourage you again, continue to get exposed to these different kinds of loan adjustments as they will help you. Until next time, cheers, I'm out.